Retail investors are suffering as a result of the latest Bitcoin problem, which started on September 13 when the US Federal Reserve released the CPI report. The market has also been affected by the recent announcement that the Fed interest rate has increased by 75 basis points. Market volatility in the cryptocurrency space was a result of the instability in the broader financial system. Today we bring a whole new topic for you. Investors haven't stopped buying BTC despite crypto market doubt. We really appreciate if you subscribe this channel. Let's get into this. As a result of the news, BTC fell below the crucial $20,000 level. New research revealed that major institutions are still making significant investments in the Bitcoin, despite the fact that ordinary investors are attempting to sell their Bitcoin holdings out of fear. According to CoinGecko's data, BTC is currently trading at $20,215, up 5.6% over the previous 7 days. Recently, New York Digital Investment Group revealed that it had raised about $720 million to invest in the Bitcoin in a filing with a SEC. According to the SEC, the fund attracted 59 investors. Despite the fact that the names of the investors were kept a secret, we can infer from the small number of the investors and the total amount raised that they are wealthy individuals or sizable corporations seeking to diversify their holdings. The NYDIG team has dealt with similar difficulties in the past, after generating over $1 billion in revenue only last year. NYDIG is now valued at an all-time high with a market cap of $7 billion. The funding round that helped NYDIG succeed the previous year was led by the West Cap. Are you still there? Like this video so that more people will get an amazing content. Let's continue. Several industry giants, including Morgan Stanley and MassMutual, took part in the investment round. This shows that institutions are becoming more interested in the cryptocurrencies, especially the Bitcoin. At the time of writing, BTC has surpassed the threshold of $20,000 for psychological support. This might be the outcome of the recent developments in the institutional investment market for Bitcoin. The price will surely increase, even if it will be some time before a significant comeback completely undoes the damage from September 13. Investors and dealers in the Bitcoin should temper their optimism though. Long-term bulls will benefit from NYDIG buying the cryptocurrency in chunks, which is what we might expect. Additionally, short-term gains are predicted by indicators, with the fear and greed index being upbeat. Although this is a bullish sign, it also suggests to sellers to sell their holdings. The next rally support will be found if Bitcoin can consolidate at the 61.80 Fibonacci retracement level. The real gain, however, comes from a rise in retail investor confidence, as most people will interpret the involvement of the major financial institutions at Bitcoin as a recommendation to do so. In September and early October, the price of the Bitcoin fluctuated around $20,000, 20% below its mid-August high, and only 12% above its mid-June lows. In contrast to the other risk assets fall, this consistent trading has increased. The S&P 500 is not far behind at minus 4.11%, while the tech-heavy Nasdaq is down 4.25% over the past month. The general risk asset meltdown is primarily the result of the central banks. In Jackson Hole on August 26, 2022, Fed Chair Jerome Powell reiterated the Fed's hawkish stance, which coincided with a new wave of the hawkishness at the ECB. Then, at the September FOMC meeting, interest rates were increased by another 75 basis points. However, perhaps unexpectedly for the typically volatile asset, BTC held the line around $20,000 and has largely moved sideways since, leading some to predict that the struggling coin has reached its bottom. Cryptocurrency markets nearly appear to be partially immune to the tech sell-off and rising risk aversion. However, recent price movements have disproved that theory. Bitcoin's comparatively stable period between mid-January and mid-April, during which it choppy trended upward with higher highs and higher lows, was only the calm before the storm. Since hitting a high of $67,734 in November, Bitcoin has decreased by 70%. The main issue is that US interest rates are going up. Since the global financial crisis of the 2008, years of low interest rates have caused markets to attain astronomical heights. If computer companies can easily borrow money, who cares if they're losing money? And if businesses are unable to borrow money, they may be able to get money from investors who, like them, have probably borrowed money. The assistance from low-cost leverage in the fiat market has not spared the cryptocurrency market. After all, cryptocurrency offers the scalability and regulatory arbitrage of the tech dream. The recent dips in the cryptocurrency as US rates have risen should dispel any doubts about it, not benefiting from low interest rates. Additionally, the rise in the US interest rates coincided with a strong surge in the connection between the Bitcoin and the Nasdaq. This has happened frequently throughout history. The correlation between various assets soars when the liquidity tap is shut off, which is often accomplished by central banks raising rates. Nothing seems to have changed this time. On Monday, October 3, stocks and cryptocurrencies both increased after the ISM Manufacturing Purchasing Managers Index dropped to 50.9 in September versus an anticipated 52.2. This is the lowest reading it has registered since May 2020, a sign that the economy is beginning to feel the effect of the Fed tightening in more areas. However, Fed speakers continued to be pessimistic last week, and on Friday we will get non-farm payrolls data. Any surprises here could ruffle the market. The likelihood of a recession is still high, hovering around 80%. The macro environment is still negative for the cryptocurrency. In 2022, regulation will play a bigger role, thanks to the numerous executive orders that have already been issued. Increased regulation should reduce investor uncertainty regarding the crypto markets, which would be positive. On the other hand, excessive regulation may stifle innovation. The ongoing regulatory environment will be crucial to watch. After a string of the central bank rate hikes last week, the cryptocurrency markets have experienced some relief this week. Before soaring to weekly highs of around $20,300 on Tuesday, Bitcoin started the week at around $18,800. At the moment, it's trading at about $19,600, with slightly better wow. Although it continues to perform worse than Bitcoin, Ethereum took a similar course. The ETH BTC cross is still in a general downward trend. It's currently around 0.07. Cryptocurrency has been trading like a risk asset for the majority of the year, driven by general risk sentiment. Notably, concerns about a recession, rate increases, and a strong dollar have dampened spirits. But now, there are some indications that the market is starting to decouple from the conventional financial assets like tech stocks. The correlation between Bitcoin and the Nasdaq has decreased significantly this month and is now under 40%. In fact, yesterday saw a 2.8% decline in the Nasdaq, while a 0.1% gain was recorded by Bitcoin. Zooming out, the Nasdaq has decreased by almost 9% month to date, while Bitcoin has decreased by about 3%. Of all of our indices, our DeFi index, plus 3% wow, is the one that's doing the best. Our smart contract and Bitcoin indices have both risen by about 1%. Our Metaverse Index is down 4%, while the Privacy Index is unchanged in WoW. While our DeFi 42% and Smart Contract 43% indices are most and Privacy 85% and Metaverse 76% indices are least correlated to Bitcoin respectively. Bitcoin's correlation to tech stocks on macro markets is declining, whereas its correlation to gold 43% is increasing. We have a slight bearish outlook for trading Bitcoin over the next 2 to 4 weeks. Thus, we should anticipate declining prices. But overall, we are bullish and believe that the Bitcoin is a good long-term investment for the next 1 to 3 years. In other words, we anticipate a long-term increase in price. The value of Bitcoin can go up as well as down, like all investments, while a complete value loss of the Bitcoin is unlikely. Investors should be ready to experience drawdowns of between 50% and 80%. Small allocations and portfolio diversifications are things we advise. Never risk money you can't afford to lose by investing in. The conventional wisdom maintains that one should buy cheap and sell expensive. However, whether or not you should sell your Bitcoin depends on the time horizon, level of risk tolerance, and objectives you have regarding your finances. We believe that any decision to buy or sell cryptocurrency should be based on an analysis of the fundamentals of the market, despite the fact that some websites speculate that certain days of the week are better or worse than others for selling Bitcoin. Following years of research into the fluctuation of the Bitcoin price, crypto industry professionals are now ready to provide their BTC cost forecast for the year 2030. It's expected to be traded for a minimum of $395,730.94295, with a possible maximum peaks reaching up to $480,779.9072. Therefore, you should anticipate that the price of one Bitcoin will be close to $407,158.13012 in the year 2030 on average. Analysts of the cryptocurrency are getting ready to release their latest price predictions, and the first one will be for Bitcoin. The year 2031 will be determined by the highest possible price of one Bitcoin, which is currently $673,759.51731. On the other hand, its price could fall to approximately $563,951.31923. Therefore, the average trading price that is anticipated as $580,273.65043. Please spread the word if you watched the entire video and found it entertaining. We will talk about something else next time.